Hello there, Maverick Traders. This is Rob. This is the Trading Room, and we are wrapping up the month of October and going into November. So let's get going here. In this video, we are going to talk about what just happened this last week. We had another down week. It's an ugly week. The market is in free fall. We're going to look at the numbers, and then we're going to take a look at the current market and say, okay, what has changed? Has anything changed? And once we get that, we're going to go through and score all of the sectors, and then we're going to find the best setups in the best sectors with the best stocks. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
Last week was an ugly week and we saw several support levels break. Last week in the trading room, I talked about 42.20. The 42.20 was the next support point, and if it broke through that, it was going to go down to 41.70. Well, it broke through both of them this week. And the next stop is 4,100, and that's literally where we closed on Friday. So we are now at another support level. We could have a little bounce on it, but this is a bearish market. If we take a look at the bonds and the US dollar, this week we had a whole bunch of really good economic news that would have sent the bond markets higher and dollar higher. Take a look. They didn't go higher. Bonds didn't do anything. Dollar went up a little bit. What we're seeing here is this market is tired. This market has gone a very, very long way. And at some point, they have to just take a rest. They are not going down. If they actually went down, we'd see a market rally. But at this point, they're just taking a little rest. I think this market can still go down if the bond market just stays where it is. We are in the middle of earnings season, and we got some good and some bad. On the good side, Intel, Amazon, Microsoft had good earnings. On the bad side, Google's earnings, they got punished very, very seriously from the market. Ford, negative. So again, we continue to see mixed earnings reports when it comes to the third quarter earnings. This week, I really want to point out two things. Both of them occurred on Thursday, advanced GDP and durable goods orders. Take a look at these numbers. GDP 4.9%. That's a very, very hot number. Look at that durable goods orders, 4.7%. We got a huge retail sales report last week. Every single economic report we're getting is way hotter than expected. On Friday, though, we got the core PCE price index, which the Fed really likes, and that shows that inflation is still right around that 3.5%, 4%. A little higher than the Fed wants, but definitely better than where we are. This week showed the economy is much stronger than the Fed wants, and the market is reacting in fear that higher interest rates are going to be coming, which is ultimately very bad for stocks. Before we jump into the week, let's take a look at last week's trades that we shared. I want to talk about this trade because this is just a really fun trade. This was GE, and I want to show you just how great option spread trading is. This was a crazy, crazy trade because we put this trade on Monday. Take a look at Monday. We did a 106, 110 bear call spread. And you can see, boom, huge jump all the way up to 115. If you were in any other trade than an option spread that you position size for max loss, you would have either been stopped out, you would have jumped out, it would have been too painful at all to do anything. This trade, a 106, 110, as you could see, came right back down. Wednesday, Thursday, Friday came all the way back down, and it ended up almost being a max gain. Almost. 35 cents away. This is why we love option spread trading at Maverick, is that you can get into these positions. You don't have to worry about the short-term volatility. You're not pressured to make that decision, the perfect timing on the exit. You just let these trades develop. Now look, it goes the other way sometimes. Sometimes you have a really good-looking trade, and then the last 2 days of the trade, you take a loss. But you don't have to sit there with the stress worrying about it. So GE ended up working out really, really nicely. We also had a diagonal call spread on Roblox. We had a 30-32, which is really more horizontal than vertical. Risk graph on this one, we talked about this last week, probably more like this. As you can see here, it closed right in the range that we liked. I know I've got a small profit on it. I'm going to wait until Monday to sell the next week's 32, but this thing held in really well, especially when the market got absolutely crushed. We also took a short in Fifth Third Bank, FITB. We've got one more week on this one. This one is a 22-24. So it went down nicely for us this week. However, we still need some more bearish action here. We got one more week on this one left. And last, we have Schlumberger. Now, Schlumberger, we had a sideways call on this one. We have a 55, 58, 61. This is our profit area right in here. And you can see this week, we drifted outside of that profit area. At this point, the trade is at a small loss. It's a small loss. We have one more week left on the trade, but we do need a bounce. We do need a bounce on this. If not, it is going to end up being a max loss, and we will move on to the next one. So let's check out the broad markets here and see how they closed. All right, let's get the closing numbers. For the week, Dow Jones down 2.1%, S&P 2.5%, Qs 2.6%, and the Russell 2.5%. As you can see, everything fell pretty much the same, so there's really not anywhere where it was one was stronger than the other. It was just weak across the board. Oil fell 3.5%, and gold is getting a bid to safety, up 1.2%. Now, I want to spend some time looking at this S&P chart, but I'm going to switch over to an interactive chart so we can go back in time and draw some numbers because this doesn't show the whole picture. I want to take a look at interactive charts so we can go back and see where all these levels are. So again, first level 4220 was broken. We got a little bit of a bounce. We fell. We identified the next level as 4170-ish. And you can see we broke through that pretty quickly. We didn't even have a stop. And now we're coming down here into some more major support at 4100. So 4100, you can see that was the low on Friday. Question is, if we break through that, where is the next stop? And I think it's pretty easy to just come down here. That looks like that is our next stop. And then next stop is around 4050. So 4050 looks like it is the next stop on the S&P. That being said, we are very, very extended here. Again, we had 3 big down days, had a rally of 2 days, 3 big down days. It would not surprise me at all to see a little rally, but at this point, all rallies should be entered into as shorts. Again, we should sell all bear rallies here. I think the eventual bottom will be made when we have a capitulation move. A capitulation move is where everyone panics and gives up. I want to go back to the fourth quarter of 2018 to really show you what a capitulation bottom looks like, just so you know it when you see it. I'm going to go back to 2018. Let's keep going back. There was COVID. All right. So we were in a little bit of a downtrend, and then we got into this really rough area. And take a look at the anatomy of this. We were already in a downtrend. Everything was going down. Once we started to break down, look at the volume. The volume came in, and again, this was panic. This is people just selling. And what happens is, as the market drops, stop orders get kicked in, margin selling gets put in, moves the market lower, which hits more stops, which then triggers more margin selling. At some point, it gets so sold out that it ends up having a decent bounce off the bottom. This is a capitulation bottom, and it really gets to where I always say whenever they're yelling at each other on CNBC, you know you're close. You are close to that low, and everyone's getting really agitated because the market is so bearish. I don't think we're there yet. The market is not that bearish, and the one thing that's going to show us when we get there, and we've talked about it last week, was the VIX. And I said I think the VIX has to get up to between 26 and 30. That's where we got our last panic. We go back to last March. That was our last big panic, big low. As you can see, we're down here at 21. That's still not panic territory. I think the capitulation bottom is close. So I'm keeping all of my bears a little bit more short term than I usually do. I'm still leaning bearish, but I'm just looking to squeeze out what I've got left in my bearish trades. And putting on new bearish trades, I'm going to put on some new bearish ones, but they're going to be shorter term in nature. And look, and if the market falls this week, I'm super happy. And then if I still think the market's going to fall, I'll put on some more short-term trades next week. And if it falls that week, I'll be happy again. You want to be bearish, but the big question is the duration of how long you want to be bearish. So let's look forward to this week. So 4,100, we could get a little bounce off that. We got a little bounce off it on Friday late. Not all that impressive. I think we go down below 4,100. I actually think we have a gap down on Monday again. I called that last week. We got it. I think we get it again. 40.50 should be some more major support, more major than 4,100. I think that capitulation low is coming. So if that's the case, again, you want to be leaning towards more bearish, but when it gets really, really, really bearish, that's when you want to pull back. That's when you want to say, oh, let me take some profits on these bears, and then you can go to cash, and then you look, and then if you miss another 3, 4, 5% down, you missed it. Not that big of a deal, because after a capitulation bottom, the bounces are very, very vigorous, and they happen very, very quickly. So just, again, be warned about that. Let's talk about this week. We got FOMC meeting on Wednesday. So I think Wednesday, I could easily see one of two scenarios. We bounce Monday, Tuesday, and Wednesday, the Fed disappoints the market, and the market takes the next leg lower and ends up, again, tumbling at some point, having a capitulation bottom. Or the market is really weak Monday, Tuesday, really weak where we fall another 2, 3, 4%, and then the Fed comes and says something the market likes, and maybe that is the capitulation bottom. As you can see, they're wildly different of what happens on Wednesday, but I think going in, what happened on the market going into Wednesday is going to have an effect. I think if we fall 2, 3, 4, 5% on Monday, Tuesday, I could see Chairman Powell being a lot less hawkish than he might have been if the market had a nice rally Monday, Tuesday. We'll see what happens, but let's take a look at what else is on the schedule this week. This is the first week of the month, so we know we get ISM manufacturing. That happens on Wednesday. And we also get our monthly payrolls report. So Friday, 8:30 a.m., we get the payroll report. You can see 182,000 jobs are expected. Guess what? That's what they expected last time. What did we get? And we got like 400,000 jobs. That could easily happen again. All the numbers have been coming out super hot, so we'll have to wait and see what happens on that employment report. Here is the question. Did anything change? Last week, we were at a -3 for the month and a -2 for the week. I think we're still there. I think we're still waiting for that capitulation. So I'm still at a -3 on the month. We're below the 20, below the 50. The slope is moving decidedly lower. I'm a little less bearish this week than I was last week. Last week, I was at a -2 for the week. This week, look, I do think there could be a bounce off of that 40-50 area. That's the next level, and we probably have a good, decent bounce off that. So again, I'm still bearish, but again, just pulling back a little bit on this weekly basis. Let's take a look at all of the sectors. Let's score them one by one. Let's find out where is the strength, where is the weakness. Last week's performance in the sectors, only one sector was up. That was utilities. And you can see a ton of stuff down. Energy getting crushed. Now, remember, oil dropped 3% and the rest of the markets tumbled with it. We had Chevron that was a very strong stock in the sector. They made a buyout and their stock lost about 10%. Chevron and Exxon make up like 68% of the XLE, the energy ETF. So when Chevron loses like 10% in a week, it's going to hurt the whole rest of the ETF. Where, you know, maybe it wasn't so bad outside in other stocks, but Chevron got absolutely crushed. Comm Services, another one. This was our shining star, Comm Services. It was holding up. Well, what happened? Google happened. When Google came out and killed it, it fell. Again, Google, if you take a look at the weighting of Google in the communication services, Google's like 35% of the entire weighting of the XLC. So when Google loses 10%, yeah, this thing's going to get crushed. However, a lot of the other stocks in the sector didn't do all that poorly. Look, I'm not saying that energy and comm services are great. What I'm saying is these big moves down are really because of one big stock in the ETF. The sectors are still looking okay underneath. Everything else was down 1 to 3%. That was it. I guess we could point to materials. Hey, look at materials. Hardly fell, but look, materials has been one of the worst ones. It just stopped being the worst. There's nothing to celebrate here in the materials sector. Here is our chart on utilities, and you can see we are between the 20, between the 50, and they're flattening out. That's a 0. Now, I know that sounds disappointing, but guess what? 0 is the best we get this week. This is the strongest sector at the moment at a 0. Here is the communication services. I would love to pull Google out of this and see what really happened. There are some softwares out there you can do that, but based on our rules, we got to go to a -2 on this. -2 on comm services. We go over here to real estate. Real estate was one that was at a -2 last week. If you remember, last week I said any stock that did not break the prior low on October 1st or 2nd got a -2. Everything else got a -3. It went down a little bit, but did not plunge. We're still, again, I'm going to call this around that low, so we're going to keep this as a -2. Next, we come on to healthcare. And I want to show you the difference between healthcare and real estate. Healthcare was right here. The same thing I said about healthcare. Hey, look, if we break below this point, it goes to a -3. If we hold this point, it's a -2. And what did this one do? It got absolutely crushed, so this moves to a -3. Next up, industrials. Same story here. Hey, you know what? It held right there. It was right at that level. We did not hold whatsoever. So again, take a look at what we saw in real estate. Real estate held in very well compared to all these others. This one moves to a -3. Financials, same thing. Hey, last week we said it's right there. If it can hang on to this level, we'll keep it at -2. If not, it moves to a -3. So these three sectors really weakened this week. We have consumer was already weak. We already had this at a -3, and you can see it just has kept moving down. This one stays at a -3. Next up, technology. Take a look. Technology is hanging on by a thread. Hanging on. So, technology does get downgraded. Remember, last week we were like up here. We were right here last week. We said, hey, it looks better than everything else. Now it's basically at this -2. So technology did get a downgrade. Materials had already broken below that. So we already had it at a -3, and it continues to stay at a -3. Yes, it didn't go down this week, but look at those candles. I don't see anything getting me excited to go long in materials. And energy is the biggest move of the week. Last week, we were up at a +1, and now we are down at a -2. Big move here in energy. And if I go back 2 weeks, we were at a -1. We went to a +1. So just this thing's got a lot of volatility is all I'm saying. Be careful with this one. Again, it went up, down. We're right back where we were a couple of weeks ago. In the end, nothing has really changed. This is where we were last week. The only sector that got a bump up, utilities. Utilities got bumped up to 0. We had a lot of the -2s fall to -3s. So now we have 5 sectors sitting at that -3. All the other sectors weakened substantially. As you can see here, there is not a lot of good news. The best thing you can say is energy, comm services, technology, and real estate aren't as bad as the rest. Utilities is just not going down because interest rates have stopped going up and people are looking for some safety. There is no bullishness out there you can talk about. So it's going to be a little difficult to find some bullish trades, but they are out there. And in fact, let's go take a look for some of those trades at this moment. I've only got 4 for you this week because, again, I don't think there's a good reason to make a lot of trades here. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. First place we are looking is utilities. Utilities was our strongest sector. So here we have Consolidated Edison, ED. If we take a look and see, okay, this stock has gone down, but after making this big low here, we came all the way back up, and we're now entrenched right here by these moving averages. This stock only has $5 strikes, so 85, 90. If you want to do some sort of sideways trade, you've got to pick which one of these you think is most likely. Do you think the 85 is more likely, or do you think the 90 is more likely? I picked the 90 to be more likely. So again, I'm going to be slightly bullish on this one with the butterfly. So that means my profit target's going to be somewhere in here. I don't want it to go down too much more. I want it to actually drift up a bit. That $90 is where I want that stock to go. So the trade is November 17th, 85, 90, 95 butterfly on Consolidated Edison. Next sector I want to take a look at, comm services. I said earlier, comm services looked ugly, but again, Google is a huge part of that. If you take a look at Meta had a good week last week. You take a look at some of the other stocks, they had a decent week. So I still want to hunt in this sector. I just want to be a little bit, again, less bullish, but a little bit less bearish. I still want to hunt in this sector. So I came across, okay, Verizon. Here I want a stock that is like going to be sideways to slightly bullish. Verizon had a good earnings report, had a nice jump up. And at this point, it's just been trading in a range. 33.40 to 34.60. At this point, yes, we're down here at the bottom of the range. We could go lower. I don't want to play anything too aggressive. I don't think this thing is going to break up above 35 and run to 40. But I do think this thing is likely to hold down here at 33. So the best way to do that is to be slightly bullish. And we use our diagonal call spreads here. So the November 23rd, 32. So again, 32 up to 34. As you can see here, we're not saying it's going to break out above. 34 is our max gain point. It actually gets worse for us if we go past 34. We're looking for this to stay right in this area. That's going to be our biggest profit area on this trade. So again, slightly bullish trade on Verizon in the communication services sector. Next up, utilities. It's been a few weeks since we've done a utility trade, and it is primed for a short here. Ingersoll Rand. Ingersoll Rand, this thing has been weak. We came down. We are just basing here. Nothing really good about this. We expect there to be a breakdown below this point. I'm looking to get a little bit more bearish in my portfolio, adding on some more negative delta, and I'm going to do that with a 55.60, November 17th, bear call spread. That means I'm really looking for this one to drop. The current price is 59.38. I'm looking for this thing to drop all the way down to 55. That is about an 8% decline from here. That's a big move for a stock like Ingersoll Rand, but in a very bearish market, I think you can make it. And the last trade I want to talk about is in tech. Tech is another one, again, got downgraded. I think you want to, again, look for the more bearish things in tech. The problem is the really bearish stuff has really gotten crushed. Here is Corning going into an earnings report, gapped down, got some buying back onto it, but that buying has fizzled out. Here's a nice bear rally pattern. We've gone from 25 up to 27. That's about a 10% run. Easily we could give back some of this. I'm not going to get super aggressive here. And you can see here, I'm looking for, that should say a 26.27. That's the trade I put on, 26.27. So if we go into it, I'm looking to play this from here to here. I don't think it goes down below its low of earnings, but I do like this thing fading a little bit. And you can see I'm only giving this 1 week. I'm looking to get some short-term negative delta. I'll reevaluate everything next Friday and see if the market is a little bit closer to a bottom. Those are all the trades I have for you this week. If you have more trades that you want to share, you guys know where to go, Mavericks. Go to the Maverick Trading website, log in, go to the members area, go to the forum, and we love to see the discussions in there. Wrapping this up, it's bearish. I said last week, and I'll say it again this week, this market's in trouble. This is the cascading effect where you just get lower and lower prices until finally there's a huge freak out and everyone then panics at the end. And then anyone who was going to sell, they've sold. And everyone else, they were never going to sell. Then we get a little bit of a bottom. I think we're heading for a capitulation. The VIX is going to be the key to that. When you see that VIX spike, 2630, that's going to tell you, I need to, if I'm bearish, I need to be looking to exit some bearishness. Again, you don't do it immediately, but on any sort of a little bounce, one green day, one hammer candle, that is going to be your exit. Take those profits. If you miss a couple percent, I promise you're not going to miss it, because these rallies off of capitulation lows are violent. I've seen 15% rallies. Now look, those usually were after a 25% decline, but they can be very, very large. On your trades, focus on the sector strength and weakness. Pretty much everything's showing you weakness here, but if you are going to do some longs, do them in the -2 sectors. Do them in utilities at a 0. Don't go chasing after those falling knives. That's not what we do at Maverick. We do good trades based on the chart patterns. Everyone have a great weekend, and we'll see you later. Goodbye.